What's up you guys, and welcome to the Crude Crypto YouTube channel. In this video I'm going to talk about the most recent price action of the last couple of weeks, where Bitcoin gained 86% in price. But most importantly, I'd like to take a step back and take a more long-term vision of the Bitcoin price, because I'm going to identify in this video all the different market cycles we went through and all the different market phases within these cycles. And using this information, I can give an estimation of where the Bitcoin price could go to in the future. Taking a look at the Bitcoin price of the past 10 years, you can see that the price is moving in waves. Here we see the first wave, and then the second wave, and here the third wave. As you've maybe have noticed, you can see that the waves are getting less steep over time and also take longer to play out. And this is of course because the price is getting higher, and therefore it takes more time to accomplish this gain in price. And also the returns are diminishing, so therefore waves are getting less steep and take longer to play out. If we take our drawings on, if we turn them on, you can see these three waves or three different cycles. All are composed out of different market phases. As you can see, after every exponential run-up, we get a bear market. After a bear market, we find a bottom, and then the accumulative bull market starts, and then we start slowly grinding up to the previous all-time highs. And after we break the previous all-time highs, we are entering the exponential bull market phase. And why can price exponentially gain in this phase? It's because we've broken the previous all-time high, and therefore there's no previous price action and no previous resistance levels which can give us resistance, and therefore price can accelerate to the upside rather quickly. And in cycle 2 and 3 you see exactly the same thing. After the exponential bull market phase, we get a bear market, we find our bottom, then we slowly grind up to the previous all-time high, we break it, and then we exponentially grow. And again, a bear market, find our bottom, we slowly grind up, and then we should expect a exponential bull market phase after we break our current all-time highs of $20,000. As you can see, these bear markets are really steep corrections. If we measure those, let's take this tool, the price range tool. If we measure those, we can see that those corrections are around 88%. For the second cycle, this was around. For the second cycle, we saw a correction of around 85%. And for the third cycle, we saw a correction of around 82%, 83%, 84%. As you can see, in each bear market phase, price corrects with 80 to 90% to the downside. If we now take a look at where price bottoms out, as we said, price bottoms out at around 80 to 90% of the previous all-time highs. But if we take a look, you can also see that price finds support on this green line here, and also here again on this green line, and this is after the bear market. As you can see, in the bear market we find bottom, we find the bottom after an 80 to 90% decline in price, and on this green line. What is this green line? This green line is the 200 weekly moving average, and every point of the green line is equal to the average of the previous 200 weeks. After we find this bottom, personally I think this is where we start the accumulative bull market. And after, the most important thing which you can see change in this market phase, I'll zoom in for you. As you can see, in the bear market, price cannot find support on the red line, the 20-week moving average. After we break the downsloping resistance and therefore officially exit the bear market, you can see that the price runs up and then cools off and finds support on this red line, the 20-week moving average. As you can see, during these both complete bull phases, these accumulative bull market phase and the exponential bull market phase, you can see that price runs up and again find support on the 20-week moving average on the red line, runs up, find support, and you can see this all the way up. Eventually you see that we break the 20-week moving average and we find resistance at the 20-week moving average, and this is also a strong indication that the bull market has ended and we are starting a bear market. After correcting 80 to 90% in the bear market and finding support on the 200-week moving average, I personally believe that we are then in the accumulative bull market. And what can we see in the accumulative bull market? First, we can see that the accumulative bull market and the bear market overlap, and this is because we still are in a downtrend of the bear market. After we break the downsloping resistance of the bear market, we can see that price runs up and then finds support on the red line, the 20-weekly moving average. And again, you can see this during the whole accumulative bull market and exponential bull market phase. You can see that price finds support on this red line, the 20-week moving average. And therefore this red line, I also call this red line the bull market support. After a few weeks, we see that the price comes down and breaks the 20-week moving average and then finds resistance. And this is a really strong indication that the bull market has ended and that we are currently in a bear market for the next couple of years. And again, after we saw the bear market decline of around 80 to 90% and the finding support on the green line, the 200-week moving average, I personally believe this is again where the accumulative bull market started. If we take a look at the current accumulative bull market phase and the accumulative bull market phase of the second cycle, we can see that in the second cycle, price remained in this bubble and found support on the red line, the 20-week moving average. If we take a look at the current cycle, we can see that price already started running up out of this bubble and then not find support, and after this slowly grind up. And after we broke the downsloping resistance, we are officially in an accumulative bull market, and we found support and then we bounced off. Why do I think this accumulative bull market should be this long? Why did I draw it this long? Because I think we could sustainably break $20,000 around 2022. Again, we could obviously break it or find resistance at $20,000 much earlier, but I personally believe that these cycles are lengthening and therefore it would take more time before we could sustainably break this level. And why did I draw this accumulative bull market phase for this duration? If we measure the first accumulative bull market phase, we can see that the duration of the first cycle of the accumulative bull market of cycle 1 is 64 bars. If we take a look at the second accumulative bull market, it was around 118 bars, therefore a difference of around 50 to 60 bars. And if we add 50 to 60 bars on this, we can see that we are around 170 bars for this market cycle. And of course, this could this is not an exact point. We could always eventually have it been drawn a bit less steep or more, or a bit steeper or less steep. But this is more of an indication, of course. As we just saw, the cycles were lengthening of the accumulative bull market, and therefore I would expect that price would remain more slowly inside this bubble, inside this phase. Sorry, not bubble. But as you saw in early July of 2019, we saw that price formed a little speculative bubble, and therefore price was not sustainable at this point, and therefore came back down. And we are currently seeing this again, where we see the price of Bitcoin going up exponentially, and of course it can go to 20,000, it can possibly even break it, but I I like to buy these dips when price is coming back to the 20-week moving average, to the red line. I think this is the most and very important rule, that you keep track of where the 20-week moving average is, and don't try to buy the top, but try to buy the dips. To make an estimation of how much Bitcoin can be worth at the end of the exponential bull market phase, we can use this metric, where we measure the degrees or the angle of the accumulative and exponential bull market from the bottom. And here we see the first angle is 57 degrees. If we measure it for the second cycle from bottom to top, we see 39 degrees. Okay. When we divide 39 by 57, we get a ratio of 0.68. Okay. If we then multiply the 39 degrees with the 0.68, you can get a degree angle of around 27 degrees. Okay, let's measure 27 degrees from this top. Okay. We can see that the angle from the bottom to the top, which if the cycles are declining in the same angle ratio, that would mean that the price could top out at around 110,000 US dollars in September of 2022. And of course, according to this metric, depending on how true this is, of course, we can see how longer the market cycle takes, the higher the price can go. And therefore, I like it when Bitcoin remains in these accumulative bull market phases, because when Bitcoin remains in these phases, we have more time to accumulate more Bitcoin, and the exponential bull market potential is much greater. Well, thank you all for watching, guys. If you'd like to see more crypto updates and crypto tutorials and more identification of different phases, or which levels we could see resistance or support, or future price predictions, please like and subscribe.